JP Morgan was once asked on what basis he would lend money or assets, and he replied, character. Money lending is an age-old act that has begun to change the face of finance and Nigeria's fintech ecosystem. In the traditional bank system, loans were exclusively available to just a segment of people who could show proof of assets. This kept the small businesses and the little people from gaining access to capital. Indeed, limited lending options. Today, modern banking allows for easy verification of identity by collecting user data used for credit scoring and due diligence processes. This has successfully pulled down the walls that stood as barriers between businesses, small businesses, and little people, and access to capital, creating a more inclusive financial service structure in Nigeria and Africa. Welcome to Tech into the Future, and join us as we dive into the waters of loans, only this time without the sharks.
Hello and welcome to Tech into the Future, where we talk about everything that's happening in tech and how it affects you. My name is Tomiwa Ladikomo. I'm the CEO of Big Cabal and the publisher of Tech Cabal, which has been covering the business and impact of technology in Africa for over a decade now.
And I am Ngozi Dozie. I look after Android partnerships for West Africa. I spent most of my career working for the biggest companies across tech, media, and telco. Alongside Tomiwa, I will be your guide into the world of technology in Nigeria, Africa, and the world.
So let's start this with a curious question. Would you lend money to a Nigerian?
So, growing up, I learned to only give money that I can do without, right? So that you're not looking for that money, you're not desperate for the money in the event that you don't get paid back. And so yes-ish, but it's never really a loan. It's, hey, I shouldn't say this on it's never really a loan. Anybody that's owing me money, I'm joking. It's never really a loan. In my mind, it's written off.
Almost immediately.
Immediately, I gave it away.
It's good policy, and I think whenever I've read any personal finance books, it's always been the kind of advice that they've given. But if you're a bank, that's really bad advice because you want to collect your money back.
Yes, indeed.
Yeah, it doesn't do well for your business.
And then
the money doesn't come back.
Then the other question is, as the FX rates as the value of the naira has devaluated, and so from 2022 it was about 800. Now it's probably sitting about 1400.
So
would you lend
in 2022?
Yes, exactly, 600.
Yeah.
Would you lend money in this day and age?
Look, the devaluation is one thing, inflation is another thing.
Very
so you
true.
got to think about businesses kind of operating in an environment where inflation's at 30%. Are your customers able to sort of afford and to pay back their loans? If it's a personal loan, what is happening to their income relative to their expenses? It's a difficult market to be giving loans in and to be trying to collect them back, whether it's personal or it's business. Yeah.
Very much. I mean, in my mind, it doesn't even really matter the rate because I was never giving away USD.
Fair. I think it's a really interesting market, and I'm actually really quite curious to get into some of the meat of this and talk a little bit about lending in Nigeria. So over the last as part of the fintech boom, a really important area that's taken off has been the fintech lenders. And today we're privileged to have one of the early pioneers in that space talking to us about that business. And I'm keen to get a sense of the numbers. I'm keen to get a sense of the realities of lending in this market and how they're doing with getting their money back.
Indeed, and I guess we will all find out. Don't go anywhere. We'll be right back with Tech into the Future.
Welcome back to Tech into the Future on Arise News. I'm excited about today's guest. He comes from a lineage of bankers who've contributed to traditional banking in Nigeria in the days of deposit slips and long bank hallway withdrawals with no ATMs. some of you might remember these days. Carbon was one of the earliest fintechs to focus on lending in Nigeria as early as 2012. That used to be called One Credit, Pay Later. In 2016, it's changed its direction and became a digital lender through its Pay Later app with the primary goal of granting customers access to credit services. Today, Carbon is a leading fintech in Nigeria and beyond leading a change in the way businesses and individuals access credit and credit products. We're privileged to have Ngozi Dozie with us. Welcome, Ngozi.
Thank you very much. Good to be here.
Excellent. I want to jump right into it. Ngozi posited that, access to capital and the people who have access to capital have fundamentally changed based on the work that you do. Would you say that's true?
Oh, no, I agree.
Yeah?
Definitely. I think when we started, the mantra was never lend money to Nigerians unsecured. And so even going to banks, it would take 2 weeks or so to get a rejection. We came in and we said, okay, we'll do 24-hour loans. And then, like you said, in 2016, we said, you know what, we'll actually do it via mobile. So now, at the very least, if you get rejected, you get rejected immediately. But more importantly, literally millions since then have gotten access to loans in a time when the general concept was you will never get your money back if you lend to Nigerians, particularly in our case, people that we'd never met. So I think it's changed, and it used to be just fintechs lending quickly. Then there was a whole push by all the banks began doing their own unsecured lending as well. So I think we acted as a catalyst, and there's more access to finance right now. There's still a long way to go, right? But I think it's definitely changed since then.
So you talk about more access to finance, and yes, I do believe that the likes of Carbon were catalysts for the other more traditional banks. But then it was also, unfortunately, an opener to what we will describe as bad actors. Right. And so such like the loan sharks that lend money and then have to do very interesting things to get their money back. How would you, if I were a lender, how would I know the difference between a platform that I can trust and one that I can't?
Right. So it's a great question. And I think the first thing is, many of the borrowers are vulnerable, right? So it's understandable they go to loan sharks. I think the first thing is just looking at the body language of the lender. I don't want to shoot our own trumpet, but some of the things we have done is, one, we've given free credit reports to all customers, borrowers and non-borrowers. And the idea behind that was that we actually want you to see that if you're getting loans elsewhere, that's being reported to the credit bureaus so that you can actually improve your credit history and get cheaper finance. I think it's the policies in play. So when a customer cannot pay back their loan, we don't restructure the loan and then charge them more. We stop charging interest so that it stops, right? We know that many people cannot pay because of issues, healthcare emergencies, right. They lost their job, etc. And so there are many lenders who say, okay, I understand you can't pay, don't worry, just pay X more interest. So looking at lenders that will actually say, okay, I'm not going to give you more money, I'm not going to restructure your loan, I'm just going to stop there. I'm going to send your good and bad data to the credit bureaus. That's an important part of the building credit history. And I think even seeing that the more you are a better borrower, you get cheaper financing. So there are many lenders that will lend money, and whether you pay back or not, the rate never changes.
Right.
The truth is that interest rate is a function of the risk of the risk.
Of a particular loan.
And if you keep paying back your loans, then your risk is lower, and so right. You should see a reduction in credit costs. So in our case, for example, the more you pay back, we either will give you longer tenor loans, more large amount, yeah. Lower interest, many times all of the three. So I think it's taking a step back, looking at the plethora of potential lenders and saying, okay, I need money, but there are actually many good lenders out there.
Right.
And just hopefully having the patience to actually choose those ones that have policies that make sense.
So Ngozi is already taking us here, so let's just talk a little bit about, so how do you deal with really bad defaulters? What are your policies? I mean, what I remember of your model is you start with relatively small loans for people, and then the amount of money they can borrow grows over time. I borrowed 10,000 naira, refused to pay it back. Well, how does Carbon deal with that?
I know, so ours is very simple. You know, I mean, we send you reminders, before loan is due, because sometimes people just forget, right? Then if you have not paid back, we'll send you reminders, we'll send you email messages. The most we do is call you. We will never visit you on your doorstep. We'll never do any of the unsavory things like,
you send it to my mother and tell her that Tomiwa is now into loan fraud, which I think I saw this week from someone.
Yes, I think we all get those messages.
No, there are some terrible things out there. But we will only go as far as communicating with you. We will tell you that we will report your data to the credit bureaus. We will tell you that if you do not pay, then it will affect your credit history. And then ultimately we'll write, if you don't pay, we'll write it off. Because ultimately, we're all, it's a risk we're taking, we're pricing for that risk, and we shouldn't go and do anything, beyond what I've just said.
Right.
And that should be a standard in the industry.
So you've come a long way, right, from 2016 to 2024. I wonder, because now there are more lenders in the market, and I guess there's now more people that are creating some kind of credit scoring system.
Yeah.
What was it like in 2016 when one was lending almost in the dark?
Right. So even at that time, the credit bureaus existed. They just didn't have much data. So we'd find that when we're checking, Tomiwa's credit report, we'll find, we see credit history, but it's actually what we put in the credit bureau, right? So I think now there's been a lot more data.
Right.
But 2016 was...
Sorry, just let me interrupt that.
Sure.
So who's reporting data? Is it just the other fintechs? Are the banks reporting now?
Everyone should be reporting. Not everyone does.
I didn't ask who. I didn't ask about one imaginary paradise. I asked who's actually reporting.
I know the fintechs are definitely reporting.
Okay.
And in all honesty, they do more loans, in aggregate.
In aggregate.
In aggregate. The banks are reporting as well, but we don't see that many. I think just as a percentage of loans, they're not as
because it doesn't serve them, right? Because they don't really do loans, to be honest, unless it's like big, business loans.
A few billion in assets to secure.
Exactly.
I mean, but he did mention that a few years ago, you saw, I think GTB, Access, and turn on their consumer loans and some of those unsecured. Are they still pushing forward with those?
I think they've slowed down.
They've slowed down. There was a time you couldn't open your email without seeing, an offer for.
Correct. And I think I suspect, I'm not in their boardrooms, but I suspect they realized, it's very easy to give loans. Anyone can. Collecting is where the issue is. Where is the issue? But to your question, I mean, before, the early days, we'd give a loan, and if it was a 12-month loan, we'd take 12 pre-signed checks.
Interesting, yes.
Right?
Okay. Yeah, I remember
that was it. That was our collateral, but in all honesty, it was more to focus the mind on the individual. And then we moved to mobile, and then it was more, we took it on trust. We took it on trust. And our experience made it easy for us. So before we started Carbon, we actually ran a debt collection service working for 4 Nigerian banks. And we found 3 things that gave us confidence. One, contrary to popular belief, there was actually high willingness to pay. So we'd call these customers and they're like, yes, I know I owe, I'm not running away, but X happened and I'll pay. And they were paying. The other thing was that, the banks were actually bad at underwriting. So maybe you could only afford a 100,000 naira loan. They'll give you a 2 million naira loan.
Yeah.
And so in many ways the banks were complicit in that level of default. And the last thing was that we just confirmed that really nobody was in the market for unsecured loans. It was such a small percentage. When I was 18, I was in the UK then. I was 18, I was a student, I had 4 more years of university education. I got a credit card, right? I had no visibility of income, coming soon. But one bank said to me, Ngozi, we trust you. And that's the approach we took. Fundamentally, a belief that people want to pay back, want to use credit for good. And yes, there'll be people who don't pay back. But fundamentally, the majority of people want to pay back. And that's what's driven us since.
It's important to know that in your experience, that was not here in Nigeria where you got that credit card. Just for all
But
for
now,
visibility.
now they've been in Nigeria and they've sort of proven the model to
It's
work
a
at least
12-year experience.
Yes,
12-year experience.
indeed, and that's the truth is that now you do have college kids coming out of college, university kids coming out of university, and having access to some of these loans. I'm curious, if not too sensitive to share, what is your MPL rate?
So on average, and this has actually been historically consistent over the last 12 years, if we give out 100 million naira, 13%, between 11 and 13% will not come back, right? In terms of principal. Now that spiked during COVID because people couldn't earn income, they couldn't sell goods in the market, etc. But that's been the case historically around there.
13%. I mean, that's really interesting. How does that compare with sort of like a mainstream bank sort of NPL ratio?
So I think I can tell you what I see on the annual report, and I can tell you what but seriously, I suspect that if you look at, when they break down their unsecured loans, right, or their SME loans, which tend to be unsecured, you will find that, and we've done this, that the same is, it will be low teens is the default you get. So, and some, I don't want to name names, but you have some that are much higher, like with a two handle.
And from a business perspective, that's an acceptable NPL for you, like 12 years in. That's an acceptable ratio. It's a profitable business. It's a
So I think it is. I think again it's risk versus return. So if a bank is assessing the risk, and they're assessing the risk of, Ngozi, who has all her transactions in that bank for the last 6-7 years, they know you so well. They should be able to give you a loan that is relatively low priced, and they should get it right pretty often. For us, most of the customers we are lending to, you do most of their transactions on other platforms. So we don't see as much. And so that means we know them less. That means they're more risky and we should price accordingly. So it's always risk. The more I know you, the more I should be able to give you a loan, give you a cheap loan, which is why the fact that we exist is preposterous. Because for years, banks have been seeing your salary month in, month out. And they should have just said, surely we can trust maybe 1 month after X years, So thanks to them, we're still here.
Indeed. So I imagine that policies like open banking would then really open up the market for the fintechs.
Yes, if done right, it should do. If done right, it should do.
And I guess my question is, so then what in your opinion, what does the future look like? There's a lot of fintechs out there, and like you rightfully said, where there is innovative ideas that are finding customers is because there's an infrastructural issue in the traditional way things are being done.
Right.
But now that there seem to be a lot of fintechs, what does the future look like? Because what does the growth look like? There's only this size of the market.
Correct. So I think the products that are out there are still very limited. So I think we've made progress in unsecured loans. Things like credit cards. I think the bankers can correct me. I think when we started, there were about 200,000 credit cards in Nigeria, real credit cards. Today, there are about maybe 300,000. In this, that's in other markets, you would have millions. So there's room for innovation even in product, right? And whether it's it's credit cards, whether it's mortgages, not at these interest rates, but that's a market. More customized loans. So I think we're really at the early stage. We haven't even I don't think we're even up to 15% access to finance, through formal institutions yet.
I have one more data question that I'd love to ask, which is the people you're serving. What do you know about them? Can you give us a bit of a demographic picture of who you end up serving?
Yeah. So to get a loan from us, you need a smartphone. So it's tech enabled. Typically between 25 and 34, probably 70% of our customers, 70% male. They're in urban areas. Lagos makes 60%. It'll be Lagos, Abuja, Port Harcourt, etc. We serve everyone nationwide, but those,
places where people are using the service heavily.
Correct. Exactly.
Interesting.
So that's the high-level demographic. 50% are employed. 50% are formally employed. 50% are SMEs. But by SMEs, we think it's primarily, I have a full-time job, but I also have a side hustle, and I'm borrowing money for my side hustle. So there's some overlap between those who are doing the standard 9 to 5 and those who are also operating SMEs, in conjunction.
Fantastic.
Fascinating conversation we're having here. Do not go anywhere. We'll be right back.
Welcome back to Tech Into the Future on Arise News. We are here with Ngozi Dozie of Carbon. Ngozi, you mentioned interest rates, and you mentioned it in kind of the context of mortgages. What do your interest rates need to go to enable different kinds of loans? And what does the future look like from that perspective for you? Or you've been in other markets,
Right.
Yeah. Any perspectives on this?
Yeah, so fundamentally, interest rate is a function of risk, right? Okay. And so if I'm borrowing money at, say, 10%, right, to fund my business, then ultimately that's going to affect the cost of lending to customers. So the lower the interest rates, then the cheaper we can get loans to customers.
Right.
So it's vitally important to bring down the cost of borrowing. And borrowing interest rate is also a function of infrastructure, cost of doing business, etc. So for us, one of the things we're looking to do, and this is where the banks have an advantage, is that they have all these current accounts that are effectively earning 0%. And so I guess this is why the banks should be lending a lot more, because if your cost of borrowing effectively is 0%, you should be able to lend at a relatively low rate. So we've been focused on trying to get more customers using us as at least a primary or secondary bank account, so that we can get these relatively cheap cost of funds, so that when we do lend to them, it's a much lower interest rate than it is right now. So our best customers will get rates of about 3-4% a month, right? Which is high, but it also reflects the cost of borrowing. And that's one of the reasons that we publish credit bureau reports. We're almost saying, banks should be saying, if Carbon is lending to this customer at 4% a month and they're paying back,
right,
I should be able to lend to them at 25% a year.
Exactly.
And so again, we're almost trying to help our customers leave us and get cheaper financing. But yeah, so it's one of the things we're working really strongly on. We've had help from the Bank of Industry. So they gave us last year a line of credit of about £500 million to lend to SMEs. And the beauty there is that by the agreement, we could only lend at a maximum of, I think it was about 18-19%, which is great for the SME, particularly when you think that inflation is higher than that rate.
Right, yeah, exactly.
So there are various ways that we are looking to get cost of borrowing down to SMEs or individuals.
So recently, you wrote a rather provocative piece on partnerships,
right,
in the fintech, between fintechs and banks.
Right.
I'd like to ask, what are your thoughts, or how do you think these partnerships will look like?
Yeah.
For those that did not read the...
Right.
If you don't know, Ngozi is a fairly provocative writer. Find his blog. It's worth a look.
It will be, yes, it's worth your while.
Right. So I think... So I'm a big believer in partnerships, right? End of the day, even for us to exist, we're leveraging on existing infrastructure, right? Whether it's the regulated infrastructure like NIBS payment rails, or the fact that I'm lending money to people who have also had bank accounts, also have a credit history. So I think it's a partnership. I think we've gone from a decade ago when all the fintechs we're going to kill the banks,
proven surprisingly resilient, haven't
they? They have. Surprisingly, not. So we've gone from that era, and also from the bank's perspective, it's like, I would never lend naked. That's ridiculous,
Right.
It doesn't make sense, To one where I think there's a healthier respect for one another now.
Right.
You know,
Yes.
so fundamentally, I think where we are now is fintechs and banks have very complementary skills. You know, banks, you know, have amazing distribution. They have a high level of trust from customers. You know, one of the key issues that many challenger banks face is people say, okay, my money is with you, but where are you?
Where are you?
Where are you? My money lost.
Yes, where are you? Where are you? So banks have that. You know, they've had years of spending on marketing, so you feel warm and fuzzy, and they have, you know, cheap deposits, and they have a lot of customers. You know, what do the fintechs have? You know, they have amazing drive and energy, right? They have great ideas. They've shown the power of using technology to reach millions. You know, we have only one office, and we're nationwide. And I think they're more attuned, importantly, towards the shift in technology. So when you think about things like machine learning, artificial intelligence, I think fintechs are great at that, right? And so if you marry that product innovation to the existing
To the strengths of the banks.
Yeah, exactly. You see, and if you, what I mentioned in the article as well is that, so like you said, we've tried to kill the banks, they haven't died yet. Right?
Yep.
You've had the banks have tried to replicate the fintechs, either in
Right.
creating startup accelerators, either in launching their own, you know, fintech, you know, whether it's health tech, insure tech,
Right.
and they haven't worked
Names
either.
that will not be named.
Yeah.
Names that will not
They
be
haven't
named.
done great as well.
They haven't worked. And so I say to myself, the billions that have been spent on those bank-led initiatives would be, I think, better spent investing in not all fintechs, but some select fintechs where they're complementary skills,
Right.
common values, and goals. And so that's why I think I see the future is, and it's you see it in other markets. You see in the UK where, you know, one of the leaders in the industry, NatWest, prolific investor in fintechs. You know, you look at it at Goldman Sachs in the States as well as JP Morgan Chase. Yes, we'll go our own way, but there's some areas where we think that there's a better area, and I'll partner with fintechs, or I'll invest in fintechs, or I'll buy fintechs out. And I think that's where I see the future. And I think it'll happen. I think it's almost inevitable. It just takes one. And then, you know, competition will take care of the
Do you
rest.
see acquisitions happen? Like, so you have what you call an acqui-hire, which is where you acquire a business, but you're really also acquiring the team so the team can come in.
Right.
And I think one of the themes you talked about in the article is there's a bit, like the whole jackpot thing is kind of really draining the banks of technical talent.
Correct.
So do you see acqui-hires happening? Because, I mean, like we've seen, there's at least one bank that's an active, you know, sort of like M&A, pursuing a really active M&A strategy. They just announced, Access just announced another acquisition in Kenya today.
Oh, really? Okay.
But you haven't seen them acquire, you haven't seen a lot of acquiring fintechs. And you would think acquiring a technology team and technology arm that you can integrate into your core offering would be attractive. But do you see that as a...
So I see that happening. I think the timing is perfect, you know. To be fair to banks, there may have been banks who tried to, but in the last few years have been years where
valuations wouldn't allow it.
Exactly. You know, you have many fintechs who
Crazy valuations.
they won't say crazy, but let's say elevated. You know, nosebleed inducing. And
In dollars.
In dollars.
Plenty of dollars.
In dollars. So you had, you know, a period where there were established, you know, there were you know, fintechs that had valuations that were much higher than some of the more established banks here, even though these, you know, had a clear history of profitability, etc., and you know, most fintechs are loss-making. So I think, you know, as I say, we are more humble now, right? We're more humble, and so that's where I think, you know, the potential is there.
Yeah.
You know,
You're open to having, not you, but fintechs are open to having conversations.
They are, and we are too.
Fantastic.
If they're listening.
I think that's a great note to end this on. If you're looking to acquire, Ngozi is he's open to conversations, if nothing else. Thank you so much for joining us. It's been a fascinating conversation, and we look forward to having you back. There's a whole host of questions we didn't get into, your history with banking, your brothers, all of that, but we'll talk about that next time you're here. Thank you so much for joining us today.
Thank you very much. It's been great.
Thank you.
Don't go anywhere. This is Arise, Tech into the Future. We'll be right back.
welcome back to Tech Into the Future. We just had quite an interesting interview with Ngozi Dozie, co-founder of Carbon Finance. We didn't get to most of the questions that we wanted to get to. So many things we wanted to discuss, how AI and what the future of AI looks like in fintech. Yeah. And, and again, what the even just his own background, right, in terms of coming from a family of bankers, et cetera. And so, yes, but one of the things that I did take away from was that is the opportunity for partnerships and where there are strengths between the traditional banks and the fintechs and, the possible synergies that hopefully, some of the bank MDs might be listening to the show and might be picking up the phones.
I think his point was really interesting around just the timing of it. So it's been, like you said, the valuations for fintechs have really been really high over the last few years. There was that sort of like big boom and ramp up in valuations, and it just made it unapproachable. And so now is an interesting time for those kind of conversations. I thought overall it was an interesting conversation just listening to their model. They've survived for 12 years.
Yes.
They were one of the early pioneers, sort of giving loans to a wide range of people who wouldn't previously have had access to it. And give them credit, they pushed the banks into doing something different.
Yes, so they sure have.
Really influential.
And they've innovated over the years, right? They've changed their names. They've changed.
I did not realize that they actually started out collecting physical checks.
I know, as security.
I know some other lenders who did that, and I know banks would do that. I didn't know that they did that.
I know, fascinating.
Yeah, super interesting.
Thank you for joining us on Tech Into the Future today. Join us next time as we take you into the business and impact of technology in Africa, how it is changing the world and how it's changing your world. Stay tuned for Rise News.